Hello, it's Mike Rasmussen, CPA Straight Talk for Small Business. It is, what do we got? Wednesday, August 5th. Hope everyone's having a great day out there. So I'm going to get right to what's happening out there to not waste your time. I'm going to then move into some real detailed, found a great article that I'm going to go through, which talks about the differences between what potentially President Trump and candidate potential Joe Biden might have from a tax perspective and what they would have on the current tax law changes when President Trump stays in office or Biden's viewpoint. And it's just a great little walkthrough. And then I'll give you my feedback on that. So without further ado, I'm going to jump right into showing my screen, which is basically going to get to, I like to go into the PPP. And of course, if the biggest news out there is the stimulus and CARES 2.0, it's going back and forth. The only thing I can tell you is that there will be by Friday some decision, and then even though they go on the House Democrat go on recess on the 7th, there will be something in the next couple weeks. It will be signed, but an agreement of all the issues are supposed to happen by Friday. Plow the internet if you want to find out all the ifs and ands and buts. It just was not worth going through all of that until we get some more concrete information. There's no doubt there are tons of meetings going on behind the scenes. So I want to go to what's out there right now. August 8th, in a few days now, is the end of the Paycheck Protection Program, the under the CARES Act, where you can actually go out and go find a bank and get a PPP loan. There's still plenty of money, over 100 billion there for this program. So it is still available. But again, as of August 8th, which is coming up in just 3 more days, which will be Thursday, by Saturday night, midnight, this program will go away. So you would really have to find a bank in the next couple days. So if that's something you have not done, you need to get on your horse and go do that. Then the next thing that I wanted to show you is we just go look at the EIDL, which is the Economic Injury Disaster Loan, and you're still able to apply here. And that is for the 30-year, 3.75%, first payment due in a year. That is truly a loan. More requirements of how you can spend that. But again, just because we watch what's available out there on the internet to see if there's any changes with the SBA specifically. And right now, here are frequently asked questions as of 8/4. Oh, I finally had something new. There you go. So there's no for supplemental materials, but here's loan details for loan forgiveness. So this is one that I wanted to show you today. This came out yesterday. So I have been going through, we've got 10 pages here as of August 4th, and I just wanted to flip through a couple of these. So this is as the reason why this more than likely came out is because there's guidance that's going to be hopefully come out even more as far as the loan forgiveness goes. And so this is the first attempt. I think we're going to see this much more in the next couple days, hopefully by Friday, because as the program winds down for the first, for the second round of this, we're going to get more guidance on loan forgiveness and what to give the back. So I could go through each. I'm going to go through just a couple for you. Which loan forgiveness application should sole proprietors, independent contractors, or self-employed individuals with no employees complete? There you go. The answer is sole proprietors, independent contractors, and self-employed individuals who had no employees at the time of the PPP loan application and did not include employee salaries in the computation of average monthly payroll in the borrow application should use Form 3508EZ. Okay? So some of this we've already known, but here's another interesting. Can PPP lenders use scanned copies of documents, e-signatures, or e-consents for loan forgiveness application and loan forgiveness documentation? There you go. Yes. So that means you can actually scan information at when you send it to your lender, and the SBA is able to use. Here it says, if electronic signatures are not feasible, then when obtaining a wet ink signature without in-person contact, lenders should take appropriate steps to ensure the proper party has executed the document. There you go. So that has to do with whether, especially with the COVID, do you need to really be there to be able to sign off on any documents? If a borrower submits a timely loan forgiveness application, does the borrower have to make any payments on his loan prior to the SBA remitting the forgiveness? Then, in other words, if you met it timely, as long as a borrower submits a loan forgiveness application within 10 months of the completion of the covered period, which we know is either 8-week or 24-week, the borrower is not, right there, is not required to make any payments until the forgiveness amount is remitted to the lender by the SBA. There you go. Here was one on the payroll costs. Our payroll costs that were incurred during the covered period or the alternate payroll covered period, but paid after the covered period or the alternative covered, eligible for loan forgiveness. This is a great answer, and yes, if the payroll costs are paid on or before the next payroll date after the covered period, they are included and available for this. So, and then there's an example based on dates, okay? Getting down here to, I think there was one, here's what expenses for group health. There was one here at the end. Here it is. How is the amount of owner compensation that is eligible for loan forgiveness determined? And again, the amount of compensation for owners who work at their business that is eligible for forgiveness depends on the business type, right? So if you are self-employed, it's capped at $20,833 per individual and total access of all in which he or she has an ownership stake. For borrowers that received the PPP before June 5th, that was the max, and elect the 8-week cover period, that cap is $15,385 if they're paid from their own business. And then it gives examples of C Corps, S Corps, self-employeds, okay? And again, the self-employed or Schedule C is not based on the W-2 that you receive as an owner. It's based on your 1040 Schedule C line 31, either from 19 if you filed or from 18. Here's a little bit about general partners. So there you go. There's 7 of 10. You know where to find this now. I've just given you just a basic recap of some of the facts, and this is all leading up to really come after the PPP program ends August 8th, which would be Saturday, 5th, 6th, 7th, 8th, Saturday. So you will be the forgiveness calculation. Hopefully there's enough guidance that will be given right now for borrowers to start sending in their applications, okay? All right, so the next one I want to go through is, here is an article, and what it was, Accounting Today is one of our treatises that basically serves all of the accounting community, and thought this was just great. What it is, let me get, election 20, Trump versus Biden on tax policy. This is good to look out in the future, especially if you're doing tax planning, which I'm involved in all the time, to be looking at what would happen at a new presidency. And I'm always looking over here to the left because I have several screens going regarding, new information that I might be able to share because I'm doing this live. So I'll give you an example. I had a client that have their retirement in an individual retirement amount. Now, you have an option to be able to convert that regular IRA into a Roth IRA. And if you do that, though, you are going to be subject to taking that whole amount over and above your cost that you originally contributed into income. And so you would be taking it into income in 2020, for the 2020 year, if you decided to convert a part of what you actually had in your individual retirement account into a Roth. Okay, it's called a conversion. So I went through the individual tax rate, and here's exactly what I talked about. We were looking on the future. I want to kind of just guess and speculate with all the trillions of monies because of the pandemic. At some point, we're going to have to all pay for that. So here it is, the current law. Here's how each one of these works. Top marginal rate is 37% for income over 518,400 for individuals and 622,050 for married. Rates are scheduled to increase after 2025. So here is a Trump, a Donald Trump, and a Joe Biden. Trump enacted 10% middle class tax cut, which reportedly could include lowering the 22% marginal tax rate. Okay, so basically at what we have right now with Trump or lower, okay? Extend the individual tax rates by. Joe Biden raised the top marginal tax rate to the pre-TCJA rate of 39.6. So when I heard this, what did I do? We were taking an educated guess is if Joe Biden was the new president elected November 3rd, that more than likely the tax rates would be increased based on this just independent study that is going out there and doing a little research. I would agree to that. So in advising taxpayers, it was let's err on the safe side and convert a portion of our traditional IRAs to Roth IRAs and pay the lower tax in the event Joe Biden came into office at November 3rd. That's kind of how we look at each one of these. Same thing for capital gains. Okay, so the current law, the top tax rate for capital gains and qualified dividends is 20% for income over 441,450 for individuals and 496,600 for married couples. Okay, there is another 3.8% net investment income tax. Okay, Donald Trump income index capital gains for inflation. So what that means, it's at or keep them or actually reduce the rate, enact a capital gains tax holiday, kind of like a sales tax holiday, that eliminates capital gains for a yet to be identified period. Would that not be wonderful? Now, this information is just, it's not in law, this is just, but sometimes as an advisor, you have to take these articles and you have to take what's going on and listen to where their head's at, where they're going to influence law whoever retains office or gains office. Joe Biden removed the preference for capital gains and qualified dividends for income over $1 million by taxing them at ordinary rates. Again, this is going to not eliminate the capital gains, but there is a preference item, which means in the alternative minimum tax, basically you're going to raise taxes for incomes over $1 million by taxing them at ordinary rates. Now, again, ordinary rate would be not the qualified gain rate there of 20% capital gain rate. It would be at the potential up the highest rate of 39.6%, which was in the prior. So again, on capital gains, no different than in the IRA or the Roth conversion. If there was clients, which I've got, that have capital gains that they could trigger this year, there's a thought to basically encourage, especially the closer we get to the election, or even is to start putting your strategies in place now. And the more and more unlikely that we learn that's going to be added to this article, which is really people's viewpoint. I'll give you a perfect example. When they start doing what I'm looking for is a lot of these topics will actually be in the debates. And that's what I'm really looking for is the next few, hopefully there's going to be 3 debates that we can watch. And that will really be a telltale sign as the debate answers from each party get analyzed And we're gonna be able to take each one of these topics and go down. And again, right now with our clients, we are starting to at least consider, do we have capital gains out there that you might want to trigger before the end of the year? The next one is, here's deductions. The basic standard deduction for married couples is 24.8. Remember that replaced the personal exemption and suspend it. Here we go. Suspend the personal exemption in most individuals through 2025. So that means if you're under, if you basically make under 24,800 as for single, or 12 for single and 24 for joint, there's no tax. Okay. Now, don't extend. Trump wants to extend the higher basic standard deduction and other deductions enacted by the tax jobs that are scheduled to expire after 2025. That is just, this is such great news. It's great news because there's been a huge benefit, and it's also simplified the filing for a lot of taxpayers. Okay, Joe Biden, limit total itemized deductions so the reduction in tax liability per dollar of deduction does not exceed 28%, which means taxpayers and taxpayer higher than 28% will face limited itemized deductions. Phase out the 20% pass-through deduction for income over $400,000. Again, in President Trump wants to keep the law or make it better and extend it after 2025 from the Tax Cut Jobs Act, which he basically spearheaded. Joe Biden wants to alter that and increase taxes. So every little, let's see, let's do tax credits here. Okay. I'm watching the House and Senate over here. So the tax credit, child with an individual tax IED cannot be claimed for the child tax credit, but can be claimed for other dependent. Taxpayer individual taxpayer identification number is eligible to claim the child tax credit and the $500 other dependent credit. So the maximum child tax credit is $2,000. This amount is scheduled to revert to the pre-amount of $1,000 after 2025, okay? Which after 2025 is going to be even after the next election. So why President Trump is wanting to, if he gains office, is to look at all these sunset provisions and not only get an economy, get the economy rolling. And I am not one or the other. I'm being as neutral as I can. But the intention right here is to look at. He basically did the Tax Job Act while he's been in office, and there were many provisions that expired after his 8-year term. So the whole thought was to basically seeing the success of some of these laws that were put in is to extend them that were set to expire. We call those expiring provisions here in 2025. And the maximum. Workers older than 20 do not have a qualifying child. There are no credit for renters. Okay. And so the additional required dependent to have a Social Security number to be eligible to claim the $500 other dependent credit. Required taxpayer to have a Social Security number to claim both the CTC and $500. That's okay. Extend the $2,000 child tax credit enacted by the Tax Cut Jobs Act that's scheduled to expire after 25. Here we go. Raise the child tax credit to $8,000 for one child, $1,600 for two or more. That's actually pretty incredible. Expand the earned income tax credit to workers older than 65. Enact a $5,000 for family caregivers of people. A refundable advanceable tax of up to for first-time home buyers. And that now, I completely all of this comes. These right here are going to come with a tax. So if you're going to giveth, you've got to take it. So right now, if Joe Biden and all of these extra credits that are not in there right now are going to go, the only way to pay for those is right here. Let's go back up to the individual tax rate right here, 39.6. Okay. So right now, the 22%, okay, And let's just see where that's 37 over 518. And then he's reducing it down. And I don't know how many people, well, how many for individuals 518 to 400,000, how many individuals that would impact. But what it would do is that's how you actually are able to offer more credits. Here's education, the current law. There's no tax credit for contributions to state not-for-profit scholarship granting organizations through some amount might be deductible as a charitable contribution. That's true. Forgiven student loan debt generally is includable in taxable income. That's a big hurt. Forgiven, if your student loan is forgiven, it's includable in taxable income. Donald Trump enact the Education Freedom Scholarship Tax Credit, which would provide up to $5 billion worth of income tax credit annually for individual corporate donations to state identified organizations. That's really not going to affect that rule. Exclude forgiven student loan debt from taxable income. So Joe Biden is proposing to forgive. Again, if that happens, if you giveth, which is what this would be, you're going to take it away, and you're going to take it away in the higher taxing as we saw earlier, okay? And estate and gift tax. For 2020, the estate and gift exemption is $11,580,000. This amount's scheduled to revert again after 2025. We had 5.8 million, and that is per person. So transfers of appreciated property at death get a stepped up basis. Let me explain that. When let's just say the parents, let's just say they both pass on, and they bought the house 40 years ago for 100,000 and it's now worth $1 million. Basically what happens is that the $1 million is the basis is really 100,000 during the lifetime, but when you decease, you get a stepped up basis to that $1 million to whoever inherits that piece of property. Now that $1 million is included and excluded, at least right now, if it happened in 2020, is part of the 11,580,000. So there would be no estate tax on that piece of property, but also there would be a stepped up in basis, which means the heir, the beneficiary of that piece of property would, if they took that piece of property and has a basis now of $1 million, not 100,000, but $1 million, and sold it the next day for $1,001,001, they would only pay gain on the $1. Okay, all right. So Donald Trump extend the higher estate and gift tax enacted by the TCJA that is scheduled to expire after 2025. So I am going to type in a question here, and we're going to go through this at the end. Any tax attributes that affect your small business from the TCJA and expire in 2025 should be addressed when you vote in November. Because as you can see, these are obviously what is happening is Donald Trump is, if he's re-elected as president, is going to advocate and push for retaining the tax attributes from the TCJA. So remember, one of the things at the end, I've got two things that I'm going to give to you to pass on to your CPA. Those are one of the questions. Joe Biden eliminate stepped up basis on transfers of appreciated property at death. So that would mean, in our example, the 100,000 versus the $1 million, the 100,000 would be the new basis. And if that beneficiary sold, then there would be a $900,000 gain that would be paid tax on if Joe Biden eliminated, stepped up, and all the rules came in timing wise and all that under the estate and gift tax. Okay. All right. I got one more. Here is also, and I might do this a little bit more tomorrow, but I want to explain. There was cybersecurity. I want to give a little plug on Always on Cyber on Security out there. Here is a report in 2018, which was only a little over a year and a half ago, but independent for small and medium-sized businesses. So what I did, we talked about, I use Adobe Acrobat, and you can make this bigger. And so what I wanted to do was I typed in passwords. And what I want to do is I want to see how many, where it talks about passwords in here. So here you go. Passwords, this whole report is 46. I'm going to go through, you're going to see how many times passwords are mentioned, and you're just going to see. So are often compromised or so on because employees use weak passwords. 40% of respondents say their companies experience an attack involving the compromise. And I'm just, let's just keep going here. So here's passwords and passwords and passwords, protection. Strong passwords are an essential part of a company's security defense, okay? Passwords, sharing passwords, use of passwords, ability to determine employees' passwords, it's not effective. Here is a chart, making periodic changes to passwords, using unique or strong passwords, the number of passwords each employee has, sharing passwords with others, okay? Human memory and spreadsheets are used to protect passwords, okay? Let's just keep going through here and see, keep going through the passwords. Employees' use of weak lead to stolen or otherwise compromised passwords, okay? Employees using weak passwords, time spent resetting, changing passwords. So there ought to be within your small business a total policy of how do you handle passwords. If it's that important in this 46-page document on security, to say, how do you do? Here is some options. Does your org take any of the following steps to safeguard passwords? Provide an alternative to keyboard entry. Periodic password changes. Require more than one authentication system, such as 2, which is where you actually get a text when you use a password. I get that all the time. Monitor third-party sites where compromised. Prohibit employees from reusing the same password on internal systems. How about working at home telecommuting? Okay, all the employees assign randomly chosen passwords. Okay, let's just keep going for a little bit here, and let's get into, and then this was just, here's just attributes of high performing companies and of using strong passwords, okay? So bottom line, I just wanted to show you is basically passwords are an absolute huge, and here's a 46-page document, and there's probably, I don't know how many we've clicked through, we've probably clicked through 100 mentions of the word passwords and how are important in the security, okay? All right, let me see if there's anything else over here. All right, I can also make this available on our website. So bottom line is what I walked you through. Okay, let's see, I'm gonna stop sharing here. So here's your CPA questions. Here's what I did. Password policy, not only internally, but with your advisors, okay? So you should have one. You should go through, just like that document said. So flip through that document and actually see all the ways that others, here's a standardized report. And yes, it was 18 months old, the report was, but at least it gives you some benchmarks and something to think about. It's a starting point to go, okay, what are other people doing? How should I change them? What kind of policies have? But you should definitely have a password policy. Then the following, when I talked to you about the difference between President Trump's viewpoint, at least right now, on current tax law and as compared to Joe Biden. I'm going to keep this article and I'm going to be listening to those topics that we talked about. High tax rates, we talked about the capital gains, the estate tax, and again, that is, as the debates are going to happen right now, you ought to be having these in the back of your mind. Ask your CPA, are there any tax attributes that affect your small business, right? From the TCJA, the Tax Cut Jobs Act that President Trump in his early years in office, and they expire in 2025, should be addressed when you vote in November. You should have that top of mind. Number one, you should know, well, what's expiring at 2025 that I really need to know about, that it could change my opinion of how I vote November 3rd. Hey, great day. Today's August 5th. The next couple days is going to be, obviously we're going to be the stimulus, going to be a hot topic, but hopefully that was a lot of information. You may need to go back and look at this video again. Have a great day. Mike Rasmussen, CPA Straight Talk for Small Business.